Silicon Valley Bank collapses. US reassures customers with guarantees on deposits. Silicon Valley Bank, one of the major banks which is part of the US tech ecosystem, collapsed on Friday. The collapse comes after two other banks, Signature Bank and California-based Silvergate, a top lender in the crypto market, also toppled in under 1 week. The collapse took place after bank's stock price nosedived on Thursday and trading of its shares was stopped on Friday. The bank after hours was shut down by banking regulators in California, followed by appointment of Federal Deposit Insurance Corporation as receiver of $175 billion in customer deposits. One of the major reasons for the collapse is attributed to rise in deposits in the bank during the pandemic as tech sector experienced a boom with bank investing in long-term government securities. In order to insulate shocks from inflation, the Federal Reserve hiked interest rates, resulting in coinciding of liquidity crunch for startups. The inability of tech companies to meet their spending with higher funding led to the bank to sell its bond at a steep loss of $1.8 billion, leading to panic selling of bonds. At the outset of the collapse, US regulators reassured depositors with accounts of up to $250,000 that they will have access to their deposits. However, nearly 90% of the depositors were above the cap. To assuage concerns of the tech ecosystem, US federal regulators have now reassured to backstop billions of deposits in uninsured money through bank-funded federal insurance money. The extraordinary measure waives the $250,000 ceiling. Despite these measures, the move will not cover the bank's bondholders and equity. As per the regulators, their investments were subject to market risk. By the end of 2022, the bank was known to have held $209 billion in assets and nearly $175 billion in deposits. The bank had Vox News and Polygon among its customers, while companies such as Roblox had $150 million held at the bank. Other companies like Roku had nearly $487 million, which is 26% of its cash reserves, whereas Circle, an American cryptocurrency company, had nearly $3.3 billion, which is 8% of its $40 billion investment held elsewhere. The move, which is seen unprecedentedly quick, comes at a time when the US is seeking to prevent threefold consequences. First, the federal intervention is meant to prevent contagion at other smaller and regional banks due to the collapse of the SVB and to restore the confidence of customers in the US banking system. Second, the move is aimed at preventing the tech startups and venture capital firms in the valley from taking a detrimental hit. Third, the move is also aimed at preventing similar fallouts experienced after the financial crisis of 2008. While federal intervention will help avoid contagion, a more hands-on approach will be critical to prevent further spread of this crisis. I'm Usama Nizamani, and this was your Daily Dispatch.